Hello everyone, welcome back to our YouTube channel, The Hedges Academy. My name is Jazzy, and today we're gonna discuss about this learning course that we are going to put in our website today, and the basic of volume profile. What is basically volume profile? We are going to discuss, and we are going to discuss how you can use it in your analysis to find the better levels for the reactive trades either ways, scalp long or short. Okay, we have categorized this video into three categories. First is the basic of the volume profile, how to pull it, what tools is going to be used, what are the levels, how you're going to mark the levels on your volume profile. Second category is four common types of the volume profile, and the third category is the secret chambers of the volume profile. Okay, so starts with the basic of the volume profile, what tools is used, how you are going to do this, and what indicators is used in the intraday trading volume profile and the aggregated volume profile. Okay, you see in my screen, this is the demonstration of the open and close of the profile of the intraday, but I have not pulled it from the intraday right now. I will talk it about later. Right now you see the value area high, value area low, and the point of control. The point of control is where is the most of the volume has been traded in a profile, the amount of buyers and sellers cumulative volume has been traded in a single point, that is known as point of control, and it also denoted by a high volume area or high volume node, you can say. So right now let's talk about the tools we use. First of all, the fixed range volume profile tool. You can find this fixed volume profile tool on your left of the trading view. If you go in the below the icon area, there is a plenty of tools, and you can see fixed range volume profile is at the end of this. You know, you can mark it as the favorites, and it will be it will be showing in your favorite bar here. Okay, if you are struggling to find it, there is also a way that you can go to the indicators, type fixed range volume profile, and here you go. Okay, you can mark it as add to favorite, and you can use it. Okay, it will be coming here soon, like this. Okay, so right now we already have our volume profile here. Okay, we just took this from the start of the impulsive move here from 11 January to this point right now. I want to show you how we mark our levels on the volume profile. You see here, that is our value area high. Okay, the settings on the range profile is, I have took it towards value area volume 80. Row size you can take it towards 100 as well, but mine is at 95. Okay, and now you see volume profile, I have customized it with this white color because I don't want to make my chart too much fancy right now. Now you see value area high, value area low, and point of control. That is our three main categories here. Now just look at the markings. Value area high. Okay, you can give it any color. I'm just giving it blue right now. That is really a basic stuff, and it's really useful to mark it on your charts for a reactive movement for the range low and range high. You see, we reject it from the range high here, value area high. If you pull the range tool from here, to this point, for example, you see we still have rejected from the high volume and the value area high here. Okay, that is the mini range, but the full range is something like this. And you can mark this point of control like this to the exact dollar POC in the orange, or you can make it red as well. I mark it orange. Now you see price is respecting this point of control as a support. Okay, that could be act as a resistance as well if price goes down and reach it like this. It can act as a resistance. Right now it is acting as a support, and that is our volume profile levels. That is really significant in trading and in your analysis. Now you see a prime example here why volume profile analysis is really important and why marking the levels of the volume profile is really important for you. Okay, um, now I'm gonna tell you what are the let's say what are the indicators of the volume profiles are important in your analysis. VPVR, uh, visible range profile. That is the visible range profile is really important for your analysis. Now you see here the high volume area here. The more you zoom in and you see it will cover up all this area of the candles at this point. You can also change the settings to default, reset settings, and you can also make it like if you don't want to struggle that much, and if it's hurting your eyes or you are confused with all of these fancy colors, you can make it like this as mine. And also you can change the settings to raw size 100 and make it 70 to 75. It doesn't matter. Okay, now you see the most of the volume has been traded in this range. That is the our volume cluster in this zone, and that is the red is our point of control. That is been showing here since 7th of May 2020. You see all of the candles volume has been aggregated in the right side of the zone, you see. And the levels we marked here, let's just put it on left side right now. All of the levels already been verified by this aggregated volume profile. This is our POC that we pulled the range from here, and you see let me just do it once again. You see here value area high, value area low, POC. So now this has been verified that this is the high volume trade area, and that is the point of control as well of our profile. And we see here we have some gaps that we will talk about later on. Right now this is just a simple strategy, simple basic stuff that I just want to tell you how to use the volume profiles in your analysis and how to mark the levels and how we do it manually. If you are using ATAS templates, ATAS software or EXO software, then you don't have to pull the range tool here. You can scrap all of the levels, value area high, low, and POC, or daily naked POC, weekly naked POC, or monthly naked POC from the EXO software. Okay, that is way more convenient for a trader to mark the levels. But if you want to do it manually, this is the way to do it. If you cannot afford the exo software, if of the subscription is really high, some people can't afford it. So if you can't afford it, then the best way to do is from the periodic range tool, periodic volume profile tool. I will show you right now what is the periodic volume profile indicator, and you can do it manually as well. Okay, let's just head on towards it. Now you see here, you type periodic volume profile. Now you need to mark it as favorite, and when you click it, it will be giving you like this. Now you have to select from here. If you want, if you are an intraday trader, day trader, then you need to tweak the settings towards daily. Okay, and you can check the value area towards 70 or 75 as per your needs. I mark it at 75. Number of rows, tick per rows, I will keep it number 2 rows. Okay, row size, as we already did on 100, you can mark it on 100 as well. Extend the POC to the right, extend the value area to the right, and value area to the right. These are the settings here. To you can just take the customization with yourself. Okay, it's really easy to customize it. Okay. Yes, it's pretty easy. Okay. Okay, this is how you customize it and how you use it for daily, weekly, and monthly to find the daily the naked point of control, weekly naked point of control, and monthly naked point of control. If you are looking for the point of control and you cannot afford the exo softwares for the volume profile analysis. Okay, so this is how you are using periodic volume profile, PVP. Okay, and that's available in the trading view for you. Okay, now it's scrapping the volume profile of the daily. You say for example, you see here 24th of February towards 25th of February. This is the whole daily profile that has been scrapped there. If you are confused, you can easily mark the levels to understand from where the periodic profile is scrapping you the volume. So this will be more convenient for you. Okay, if you are pretty confused, now you see I mark the levels of the daily candle of the previous daily, and you see exactly from this point the periodic volume profile is scrapping me all of the candles and the the levels, high, low, volume, value area, and the POC. Okay, if you are confused with these points, you can just remove it and it will be something like this for you. You can turn off this red as well if you are confusing. Okay, now it's more convenient and more clear picture, less noise for you, and you are pretty easy to understand. And now you can mark your levels. If you want to mark the daily naked point of control previously, you can mark it like this, and you see exactly to the dollar it has been respected. So these are the levels of interest that you need to mark on your levels, on your chart, the levels. Okay, so it's pretty easy for you if you understand the process, how Jazzy is doing his analysis, what are the thought process behind my analysis. The thought process is really important for you. If you understand the thought process, you are pretty pretty good with the analysis, and there's no way, nobody can stop you, and you won't be in loss. You will be making more profit, and you will be a more profitable trader. That is the 80% strategy, because market runs in supply and demand. Okay, market runs by the volume, by the money. If you are using volume profile in your analysis, and you know what you are doing with it, then it's really easy for you to understand and scrap the levels for you, the reactive scalp trades for you. It will give you best entries for long, it will give you best entries for your shorts. You can use the volume profiles along with your analysis, along with your research. I'm not saying that depend only on volume profile. You can use it with this smart money concept and the other analysis that you are familiar with. For example, the IDR and DR strategy, or astrology strategy, any other, the buy side liquidity strategy. Everything you can just put together, compile together, and there will be more weight putting on your trades. Now you see, from this daily naked point of control, the trade is really pretty easy, and it's really nice that you can see the pump is almost 1% pump almost. So this is how you can make your stuff, you can use it with the Fibonacci strategy as well. That is the most powerful strategy I have ever been using. These Fibonacci levels, Fibonacci tool is something out of the box. It's brilliant. So now you see here we have the value area high. You can mark this level as well. That is from um, previous daily, the day yesterday. So this is also combined with the value area high is combined with the high volume cluster here. So it's pretty easy, and you see the order block is also here. So this is really good strategy to follow the periodic volume profile for daily, and you can do it on weekly as well if you want to scratch the weekly profile, for example. Okay, now you see that this is your weekly naked point of control as well. So along with the high volume traded in this area, that has been cluster of this. So you can mark this level as well like this, and you can mark this POC as the volume weekly naked point of control, along with the daily naked point of control. So DNPOC plus the weekly naked point of control as well. So it's a weekly on the BTC USD on Bitstamp. This is basically the Bitstamp chart. So on your exchange, it might be a difference in the price for the point of control, but on the Bitstamp BTC USD pair, I see this level as weekly point of control and the daily naked point of control. If you want to scrap the monthly, you can just tweak it the settings to monthly, and there will be a monthly profile coming in here. You see, so monthly naked point of control is also sitting over here. You see, so a ballpark area, yes, and it's sliced through it, and then rejected, then make support above it. You see, previously it rejected here, sliced through it, rejected here, find some support below it, then it makes support above it, flip it into support, and moving back up, making the higher lows and higher highs right now. So this is your MNPOC, make monthly naked point of control as well. So this is how you are using volume profiles to mark your value area highs, lows, point of controls, your monthly value area low, PM POC, you can say, oh sorry, PM value area low and PM value area high. Basically it's not a PM, not previous month. PM means previous month. Previous month value area high is here, and the previous monthly value area low is here. You can say that is the current month, so you can just mark it like this. Okay, monthly value area low and monthly value area high. because the previous monthly value area low and high is from here. Okay, so this is all the part of the basic levels to mark on your chart using the indicator, using the range profile tool if you are trading the range. For example, if for example if you are on the lower time frame such as 5 minutes. Okay, yes, here we go. So if you are on 5 minute and you want to trade the this range for the scalp purpose, you can use the range profile tool here. You see, now you have the levels here to understand. Let me just remove all of these things first. Now you see you have point of control of the range here, value area, high value area. You can also tweak the settings towards 100, raw size, and all of these things. Okay, I pulled this wrong here. I need to mark it from the starting point here. So now you see the value area high of this range and the value area low of this range, and you have the point of control as this range. So you see how easy is it for you to understand the range here. You see it's respected. It gives you a good trade if you are scalping this value area high towards the POC. Is 0.60% scalp, and that is really nice scalp for me. If you are a good day trader, range trader, you know what does it mean for you. So basically, the range profile tool you can use on lower time frame. For the priority, you can use it on daily, weekly, and monthly, and you don't have to worry about the wrong pulls. People are very worried about the wrong pulls, that they are pulling the range profiles really wrong because they don't know how to pull this, where to pull this, where to end the volume profile. So if you are a confused trader, you can use the periodic volume profile for the intraday trade, the developing day and the previous day, and you can find easily good levels, good point of control, very very low, very very high, and of course the gaps, ledges, high volume node, low volume node from those profiles. In my third category of this video, I'm gonna talk about the secret chambers, where we're gonna discuss about the all of the other stuff that you can scrap from the value volume profiles for your analysis, and that's really a game changing stuff. So let's talk about this second category, which is four common types of the volume profile. Okay, coming back to the four common types of the volume profiles. So starting with the P-shaped volume profile here. Basically, a P-shaped volume profile typically occurs when a market rises sharply. As you can see here on the lower time frame 4 hour, you see we just marked it from the lows to the highs, and you see the P-shaped profile has been occurred here, and you can analyze it that the the uptrend from here to the short uptrend, like for example 15-16% upside, the volume profile occurs, and then it consolidates when P-shaped profile spotted in the price action. It sharply increase and then consolidate after price reaches the upper end of a P-shaped profile here. There can be a period of consolidation like this, where balance is reached between buyers and sellers. Means like buyers and sellers, buyers and sellers. The balanced ranged, the balanced price range formed as you can indicate as a consolidation in this range. The lower portion of a P profile is a long and thin. Long and thin price, you can say, like for example, having some inefficiencies there as well, you see, and it represent low volume rejection as well. The wide upper section represent where a fair price was reached, and trading activity elevated, you see. So what means elevated means like it most often finds some balance and price trading activity elevated and price reverse back down and find some support at the inefficiencies and then move back up. While P-shaped profiles often print during the uptrend, a P-shaped profile can also mark the end of a downtrend, indicating a possible short covering rally, which means like a short squeeze in a short term. And usually it's a temporary strength, okay, within a market. P-shaped profiles can be interpreted as a bullish signal, and you can say a continuation after the consolidates break either side, you see. And most of the time it breaks to the downside and then find the support at the inefficiencies, filling the thin the thin profile here, and that represent the low volume rejection, and filling all some of the or maybe all of the inefficiencies along with your confluences, and it most often moves up. So as you can see here, the P-shaped profile formed, breaks down, fill the inefficiencies here, like this one, the major inefficiency, and then back up. So this is happens in the uptrend. Okay, P shape always occurs in the uptrend. Now we're moving back to the second, which is B shape. Let's talk about it. Okay, now here the second profile, which is B shape volume profile. And a B-shaped volume profile forms when a market falls sharply and then consolidates. You see here, it's falls sharply and then consolidates at this point. You see the opposite of a P-shaped profile. You see, we discussed the P-shaped profile, and now it's a B-shaped profile. That is the opposite of the P-shaped profile. A B-shaped profile can occur as a result of long liquidation, while P-shaped profile representing short covering. B-shaped profile represent a period of selling before balance is found in the market. You see, period of selling here at this point, and then we found the balance of the price range here in the market between buyers and sellers. The upper portion of a B-shaped profile is a long and thin, representing low volume and unfair perception of price. For example, the inefficiencies, we can say the for example the gaps and the fair value gaps, like in the candles, the imbalances, you can say. Okay. So the wider bottom section represent this one, where price once again reached a balance between buyers and sellers. This is a beautiful range for the scalp traders. They long the value area low, short the value area high, and make profit. The B-shaped profile are commonly found during downtrends. It's usually found in the downtrends, but when a B-shape is seen during an uptrend, it can potentially indicate a reversal, because B-shaped profile represents, like I told you, the longs exiting the market. Okay, the longs liquidation, longs closing their trades. So if it forms in the uptrend, that you will be very much sure, 80% of the strategy, that price is going to reverse, uptrend is going to end here. They are generally understood as bearish signal. Okay, bearish signal, you understand this. Now you see here, after this B-shaped profile, longs liquidated, all of the over leveraged late longs punished, price moved back up, and that is a beautiful uptrend after this B-shaped profile. You need to know how to spot this with the help of the fixed range profile. Okay, you need to, like, for example, I'll give you the best example here. You see the price is going downside and consolidating. Then you are going to anticipate here, for example, at this point, okay, that price is making the B shape volume profile, and you will be well known, well informed that it's a buy signal for you before the uptrend will start. You see, beautiful. So this is how it works. Okay, I want to find a best example for the reversal if it forms in an uptrend. If I can find a beautiful example, and then I will let you know about it. Uh, in an uptrend, yeah, in an uptrend, if we see the B-shaped profile, for example, that indicates the reversal. For example, this is the beautiful uptrend you see for the intermediate short term. I am spotting something here, as you can see this one. I spotting that B-shaped profile happening here. You see, and that is where I think we need to be careful in longing. You know, you need to be careful now because price gonna reverse back down soon as possible. More prime examples can be found in an uptrend if you can, if you're not lazy enough. Basically, it's a macro downtrend, so I'm more looking for a bigger uptrend, like on from 40 to 60K. So we can have a knowledge, better knowledge. Yeah, here we go. You see 69K, that was the beautiful top here. uh, you see here, beautiful example, man, beautiful example. You see the B-shaped profile forming here. That is the reversal point where you see longs exiting the market, and you see the continuation of the downtrend is enormous. You see biggest downtrend happened after that. So this is the reversal moments that you need to point out while you are trading the charts. You similarly here, I see something similar here. Yeah, B shape profile is happening at this point as well. But that is the biggest consolidation range. But it is far more enough for me to understand that it's not the time to long. And most of the people have been trapped, have been FOMO'd here and trapped in their longs. So big players exiting the market, and you are good. You know what to do now. Okay. So this is the uptrend happening from here. You see, um, you can have your confluences. For example, if you have the Fibonacci extension tool and you know the expanded targets towards 1.61869K, you will be more confident finding the B-shaped profile reversing here, and that is your confluence for the trade that will put more weight on your trading strategy. Okay, now let's come towards the third volume shape profile, that is called, let me just give you D shape profile. Let's talk about it. Okay, so here we go with the D shaped volume profile. D shaped volume profile occurs when there is a temporary balance in a market. The point of control is typically located in the center of the volume profile, indicating a balance between buyers and sellers. Now you see it's making a D-shaped profile here. You can see here, like for example, like this D-shaped profile. As you can see here. So now, what exactly D-shaped profile is useful, and how you can trade this? Basically it indicates the choppy range, you know, the choppy range. You see uh, for example, value area high and low, you see a lot of time has been choppiness, and it's almost the range of 10%, and it's really hard for a beginner to trade these ranges. They most often looking for a breakout to the upside, and they chopped in that way. Price get reversed back down and take their stop loss or trailing stop loss. They are bad in profit taking. They don't know that this is the range happening here, consolidating between buyers and sellers. The point of control is mitigating at the mid side right now. So this is probably the range, and they need to trade it like value area high, value area low, high, low, high, low, buy, sell to accumulate in this range. But it needs a professional attitude to do this. Okay. Some traders might interpret a deep profile as a choppy or sideways. Okay. Market that lacks a clear direction. You see, this consolidation is lacking a clear direction. You see, it breaks out here and performs a fake out and reverse back to the point of control. Consolidates above the point of control. People were looking for a massive move to the upside, and the institutions were loading up their positions from there, these points. So in the footprints, we can see that institutions were heavily closing their longs and putting the short orders at this value area high. So we knew that this D shape is gonna break either side, and if we follow the footprints of the institution traders from the advanced technical analysis, for example the exo charts, then you can know that this D shape profile is going to break to the downside because they are heavily accumulating their short trades. Okay, so however, uh, for example, like in anticipation of a potential breakout, uh, you can see the exo. Okay, as I already told you. Now, what has happened here? You will be interested to know that exactly it break out from this pennant that has been forming here to the downside. You see, and that was the heavily downtrend happened once it break out to the downside. This is why the D-shape profiles are really helpful in your trading. You know, if you are a good trader and you are good in spotting all of these points, you will be well aware of that the shorts are loading up from these prices in the footprints. If you are beginner traders, then you must avoid this range from trading, because if you can't trace the institutional footprints on the advanced technical analysis and the order flows, then you must avoid this choppy range, because most of the trader I see, they avoid the D-shaped profiles to trade because they don't have the access to the high profile advanced trading platforms such as Exo, Etus. They are not aware of the what is happening behind the candles. They don't have the candle statistics. They don't have the volume statistics, that what is happening behind the candles, how much delta, positive delta and negative delta is coming in, how much positive sellers and negative sellers are coming in, not the numbers of sellers and the numbers of buyers. So they don't have the perfect data to analyze on this volume profile. What they have only is the shape of the profile and the levels of the profile, such as value area low, high, and point of control. They only have this type of figures in front of them, so it's probably the really hardest thing to trade for them. If they have edge to the market and know what is happening behind this volume profile D shape, then they are very well known that which side of the market is going to break out in this range. Okay, yes, that's it. Anything else I need to cover in this? Okay, yeah. Now let's head back to the last shape profile, which is B shape profile, the capital B. Okay. Now here comes the last volume profile, which is B-shaped profile. It is really interesting to know, and it will help you a lot. It will help you a lot. This volume profile, the B one, is going to help you a lot in trading the trend. If you are confused, if you don't know the trend continuation either or not, so this will be really game changing profile for you if you know how to use it with your analysis. uh, B shape profile arises in the trend when two D shaped D for Denmark dog. D shape profile occurs with a specific time period, although there is only one value area and point of control. Some order flow traders will separate profile into two separate D areas with their own value areas. Okay. While B-shape profile are generally interpreted as a continuation of a downtrend that I just told you. Trend, downtrend, or the you can say or the uptrend. It doesn't matter that it's a continuation of the downtrend. If it forms in an uptrend, the B-shape profile, then you can say that's the continuation of the uptrend as well. Okay. What the let me just take my note. Yeah, it is important to note which point of control is more dominant. Usually we have two point of controls in the B profile. First is here, second is here. This is value area high, but if you know previously, when we discuss about the D shape profile on this range, that is here we have the two the point of controls. One is here, second is here. Okay, so now you need to understand this, which one is the more dominant. Okay, which one is more attractive for the price action, which one is will be the more magnetic for the price action, indicating where activity was greatest at the top or the bottom of the profile. The If the activity is the greatest in the downside of the B profile at the point of control, then this means the lower point of control of the B shape profile is gonna be dominant. Okay. As you can see now here, the downtrend continues after formation of these two profiles, and from the mid, it just you can see here, for example, you see the midpoint of this whole profile, point 0.5, it just rejected and moved backwards to the downside towards 15,000 something. That indicates the continuation of the downtrend, exactly making the lower highs and lower lows. And right now, what we see is price is trying to break the downtrend in more like market shifting towards the uptrend. It's struggling right now. We cannot be sure at the moment, but we can say it's doing its thing, and it's trying to make it to the upside. So this is the point, the mid of the point right now, the range high as well of this whole exaggerated move. And 30k could be our target if we see some nasty bullish moves in the market. Then we can say this is going towards the B-shaped profile point of control. Okay, so this is basically if you just remove all of the noises at this point, it will be more convenient for you to understand this volume profile, the B shape. You will be known that price is going to turn to downside as it happens in the downtrend. The continuation of the downtrend will remain. You can use your Fibonacci tools to understand the targets to the downside if you know how to do this. For example, like this. 1.27. You see here 1.272 and 1.618. This was the really nice area of confluence for the reversal point. If you pull your Fibonacci from this point to the midpoint of the B-shape profile, you got to know that some of the price action is going to respect these levels. And if we can see, uh, in my opinion, it respected some of the levels. 786 has been giving some scalp trades here. Rejected, then move back up. Continuation to the downside is happening here. Then we will see a big move to the upside. Okay. Below the point of control, you see price is rejecting from this point of control of the B-shaped profile and trying to reclaim it here. Reclaimed, move up, big dump from the 0.5 Fibonacci level, and then find some support at 1.272, give some good bounces, good scalp trades from 1272 Fibonacci. Okay, that's pretty nice. And yeah, okay, okay. So you see here 0.5 of the Fibonacci rejected exactly. 382 has been rejected exactly. So key levels of your Fibonacci has been rejected exactly from the Fibonacci strategy. If you are using, you can use your levels as well from TPO, from the daily, weekly, and monthly levels of the candles. You can use the smart money concept levels. You can use a lot of things combined to know your levels to trade exactly these B-shaped or any of the shape profile. You see, I just pulled it from the highs of this move from here to here, and now you can see it exactly respected 1272. It exactly respected 0.5 here. From here it's flip it into support here. It rejected 382 and find some support at this point, then this point, and now we are struggling. Maybe we can find some support at 382 as well again, and then back up. So this is all I just give you an example to determine your targets. If you know the downtrend will happen, the continuation of the downtrend will happen as far as the B shape is concerned. So you can just know your targets easily. You can have your swing trade, and you can take your profit at the range low, or you can just take profit at 1272, 1.618, or 1.66, or any of the Fibonacci that you understand that is more respectful in studies and hypothetically. So that's all. Why I said this is the game-changing profile, because it's really important to know the trend. Because if you are not on the right side of the market, then you lose money. If you are on the right side of the market every time, it doesn't matter the entry, but you never lose money because you know you are on the right side of the market. Okay, so that's why the B-shape profile is really important for all of us. Okay, now let's head towards our third category of this volume analysis learning course, which is secret chambers of volume profiles, which is ledges, high volume nodes, low volume nodes, volume inefficiencies, for example, the gaps. So let's talk about it. Now, this is the third and last category. We are talking about the uh, secret chambers of the volume profiles, and it's really technical stuff, some advanced kind of thing, and you need to practice a lot to find the perfection in this theory. Okay, let's start with this one. I already pulled this range from here. Okay, let's do this. You see, price is trending from the swing high to the swing low. So I just pulled this, and I want to see where price is respecting. Okay, I'm just we don't need this value very high, low, and POC right now. What we need is just simple volume ledges, volume nodes to determine the price support and resistance, potential support and resistance. Okay, I already made a group here, as you can see. Now it's let's just hide this first. Okay, if you want to mark the low volume node, this is your low volume node here, the singularity. The singularity here is your volume, low volume area node. Okay, LV and low volume node. You can mark it with the blue line. Okay, so now you need to understand this low volume node is basically where is the lowest volume has been traded between buyers and sellers, and the low volume node is defined as a singularity. Okay, if you see something like this, for example here, that is your volume, low volume area, that is low volume area, and that is also known as inefficiencies, gaps. Okay, the vacuums in the price action. Okay, we will talk about it later on to be more specific about the gaps. Right now I want to discuss about the high volume nodes, low volume nodes, and the ledges. You see here this particular bar here, that is our high volume node. Okay, between the high volume nodes we see some low volume nodes as well, but it's not that much low, it's just kind of slightly low. The low volume node will be something like very much deep inside, like this, or maybe more to the deep inside. That is more, you can say, the low volume node. The more deeper it is underneath the volume area, that the more it is known as, like for example this one. You see, whenever you see two or more of the volume bars having together is known as volume ledge. Volume ledge. Okay, that is your volume ledge area. If you see something, for example, something like this on the volume area, let me just give you a brief example of this. Two bars like this, and you see a lot of vacuum around it. Vacuum, that is your volume ledge. Okay, it will be act as a support and resistance, or maybe resistance. So this is your volume ledges. Okay, right now we find similar here, that is our volume ledge. If you find something here, this is also known as volume ledge, if you can see. So you need to mark it on your charts, and we will see later on which will be respected most of the time. Okay, your high volume node here, you see, high volume node here. Okay, and that is your final last high volume node here. That's not significant, but it can be used for the support and resistance later on. Because we have a low volume node aligned here as well. So I want to mark this as a significant area of interest. Okay, now you have marked all of your levels. What we need to see now is price action on these levels. Okay, now I'm going to enable the price action. So let's see. Make it some like this. Go back, go back, go back, go back. Okay, now let's slowly. Okay, rejected from the ledge, rejected from the high volume node, coming back to the launch pad of this volume ledge, find some support, move back up to this high volume node. Okay, now you see it's finding some support here. Low volume node has been exactly respected as a resistance, support and resistance. You see, 2 times rejected. Okay, no support here. Okay, find some support. This is your reactive scalp trades if you want to trade it. Resistance, resistance, consolidating, consolidating. Okay, resistance finally. Now heading back to the ledge here, find some good support, and yeah, here we go. See this one from the ledge to the upside, good scalp trade. Rejections, find some support at high volume node here. Okay, moving back up. Okay, high volume node here, slicing above it now, making support above it now. Okay, reject it. Stop loss triggered probably, yes. Okay, high volume node giving some reactive scalps. Okay, okay. Now you see here has been filled, gap, volume gap. High volume node here is respected a lot of time here and consolidating between high volume to low volume node in this volume inefficiency area, filling the gap here, personally speaking, filling the gap, the inefficiencies. Okay, now heading back down towards maybe this ledge. Yes, we're gonna put our entry here to find a good reactive scalp with a tight stop loss. Resistance, acting as a resistance. Okay, this ledge is working really well. I want to see what are the reactions below this volume ledge and this and this. Probably this is going to be happen now. Okay, you see, at this volume ledge and this point, it's patient trader who is more patient is having a good profit here. 4.66% 68% profit. If you are sniping, if you are a sniper, and if you are more patient, you're gonna scope it up from here, and you're gonna have a good profit. You see how these levels is really important for as a secret chamber for a professional trader. These levels are really important for you to understand the high volume, low volume ledges, nodes, low volume areas, inefficiency gaps, to find more concurrences in the ranges to trade, reactive scalps. And also it will help you to understand and determine your take profit areas, you know. Like for example, if I am longing here, for example, I will be taking profit here. I'm not gonna looking for the low volume node. It's maybe I'm gonna take profit one here, putting my stop loss at entry, and I'm gonna enjoy my 50% profit. Yeah, it's a big deal. But this levels can be your take profit. You can easily use them in your trading strategy. You can make your own signals. You can make your own trade setups with the help of these levels. This is personally called basically volume analysis. Volume analysis. Okay, so this is it. This is the second technical volume technical I'm going to give you example on. So now you see here precisely how precisely this has been respected. 1, 2, 3, 4. It gives you probably the best trades ever. 8% trade, 7% trade, 6% 6.78, 4 to 5%. From this one you can see 5% here. So it's a kind of, to the inefficiency pockets, to the gaps, you are having a good trades, to of your life. 8%, 7%, 6%. For me, this looks like a swing trades. Swing trades, yeah. There's a lot of profit for a leverage trader. And now, in the end, the beautiful ledge along with the high volume note, basically, if I'm not wrong. Yes, this is the high volume note. I marked it with blue. So high volume node along with the volume ledge, you see beautiful points, beautiful supports and resistance also here. So this is all you can say kind of a volume secret and volume secret analysis that consists of volume ledges, high volume nodes, low volume nodes. And it's really amazing thing to trade if you are a good trader, if you are a patient trader, if you know your risk reward ratio, if you are a good risk manager, you can easily trade these levels with minimizing your loss, the low loss. Now let's get back to the second example here. As you can see, I already marked the levels, the volume ledge. Let me just hide this. Okay, so here we go. Oh, the low volume singularity. As I told you, the singularity of the low volume here is really important. This should be in the single term, so you will be easy to mark these levels. And the high volume node here. Okay, the high volume node here. The low volume node at this point, you see singularity of this, and you need to name this as low volume node. Low volume node as well. And the low volume node as well here, LVN. Okay, there's a couple of low volume nodes down there. And we see ledge here, volume ledge, as I told you, this double bars. This is the low volume node along with the volume low volume area. The low volume area along with the low volume node is known as your inefficiency gap. And if you see the For example, let me just first remove this so you won't be confused. Okay. Yeah. Okay, let's do this now. I'm gonna start from here. Yes. Where we are. Okay. Okay, so from the swing high to the swing low, I want to know what are the upcoming opportunities for me to trade. So I mark the levels. Now let's see. Slicing through this ledge here, slicing through the low volume nodes, and exactly going towards this volume inefficiency gap that has been our prime target. Okay, moving back up, finding resistance at the ledge, make it to the launch pad, find some support here at the ledge. Yes, you see how beautiful this is. Okay, now you're gonna plan your take profits. Okay, find some good support here at this low volume nodes. 1 2 3, both of them has been respected and flipped into support. The high volume nodes and this small gap here has been rejected. And if you want to scalp this, you can scalp this as well to 2% profit here. If you want to scalp this move, you can scalp this. If you want to take entry at low volume gap here and the low volume area, that is your 3% profit here. Okay, now let's move on. Rejecting so far from the high volume nodes. Okay, respected the last target of the low volume node here. So if you combine all of the profit from the lows to the highs, that is your 6.56% trade. If you are a patient trader and you are a good risk reward, you have your stop loss intact below this lows and the low volume area and the gap, you will be in profit ultimately. Okay, now it's respecting. Okay, we can plan a short from here, from the equal highs and the low volume nodes. You can plan a short, and you can target this value area, or sorry, volume ledge here that has been respected only one time. So in my opinion, there is more chances that it can respect it twice. Okay, that's, you see here is your take profit area. 4.85% profit you have been made here. Okay, now it just take the volume area low as well here. The volume gap has been taken out. Okay, displaced below it. Take the stop loss of the traders. Move back up. If you want to scalp it again, you would be in good profit again. You see at TP1, TP2, maybe TP3. So TP1, TP2, TP3. Let's see what's gonna happen next. Need to reclaim this area as well. That is your invalidation. If it does not respect, yeah, that's your invalidation level as well. And this has been invalidated because this is rejecting, so this is invalidated now, and you close your trade in a small profit. Okay, you see it's rejecting, so it's dangerous area to trade, you will be chop out. So basically, if you are longing here, you will be taking profit one here, TP1 here, and you're gonna close your trade at all your trade at the low profit, because it's rejecting from the low volume nodes here. See. Okay, so this is how it works. If you are a professional trader, you know your risk reward, you know where your invalidation is, and you know how to play these low volume nodes, ledges, and the volume gaps. Okay, there is a plenty of examples in the charts, but I can't make this video too long for you. I will be giving you the trades based on the volume ledges, low volume nodes, high volume nodes, and the volume gaps, inefficiencies, the gaps, for example. I will be giving you these trades on our paid Discord group, the Hedgers Academy, and we will practice it day by day, and we will get it. All of the beginners gonna get it, and they will be mastered the skills of the volume analysis. Okay, so this is all for today and for this learning course. If you want any more of this type of stuff, you can just make a request in the group of the Hedgers, and I will be putting more of this type of learning literature in the group. Okay, thank you for your time. I will see you in the next video. Take care. Bye bye.